Sona BLW is the counter which is in focus. And we also have Puneet joining in to discuss as to how the quarter has panned out for the company. And of course, we're joined by the management for the conversation as well. Puneet, how was the quarter for Sona BLW?
Well, definitely. First, thanks for that. So definitely, earnings were largely in line with estimates. It was expected to be a slightly weaker quarter. The revenues were down by about 2% in this one. But largely, I think it's the commentary that's something in focus for the street today. And while the stock is in green, it's corrected from its highs. But to know more about how the quarter gone by was and what is the outlook for the next financial year, we have Rohit Nanda, the Group CFO of Sona Comstar, who's joining in now. Mr. Nanda, good morning, sir, and thank you so much for joining us today. Just wanted to start off, essentially in this particular quarter, it was, marred by tariffs essentially, and that's something just I want to start off as, because you had one huge order win by the end of the, I think March somewhere, you got a big order win of 1,500 crores. What is the current conversation like on the ground? Have you seen some delays in terms of order wins in the month of April?
Yeah, good morning and thanks for having me here. So look, there is right now, as you can imagine, with so many multiple noises which are coming out and multiple clarifications, etc. Till I would say 2 days ago, there was too much of confusion. Therefore, I would say there's been noise because of which it is difficult to sort of. So uncertainty has gone up, let me put it this way, in terms of one's ability to predict or to see the near term. Having said that, there was this clarification which the White House has issued with respect to auto tariffs 2 days ago. That kind of clears up a lot of, I would say, fog, at least for the time being, unless there are new announcements that they make. So right now, I think what they've done is they have said that companies which are doing high value addition in US and under USMCA, they will be largely unaffected if the value addition is upwards of 85% in the first year and upwards of 90% in the second year. So from that standpoint, if we look at our revenue exposure to US, which is about 40%, we've done some assessment customer by customer. So out of this 40, 30% of the total revenue comes from OEMs directly, and we've done the assessment. And according to us, for most of their platforms, they are doing value addition more than the threshold within United States. So this part of the revenue should stay unaffected. 10% of our total revenue that comes from US is through tier ones. There also, we've done order by order assessment, and our view is that at max 3% of our total revenue is what potentially could be at risk. But that also is a worst case scenario because the customer will have to find a local manufacturer who can sort of potentially replace the supplies that we are doing, and typically that also takes about 18 to 24 months. So having said that, that's the, I would say, preliminary assessment basis the clarifications which have come out just 2 days ago. In terms of order pipeline, the pipeline continues to be strong. There are engagements. In fact, the level of engagement with some of the European customers has gone up in the past 2-3 months, maybe because of the uncertainties of the supply chain, which are there or which have cropped up, I would say, over the last 3-4 months. So level of engagement with the customers has gone up, but I guess till the fogs clear up, the order wins and all may be a tad slower. But as I said, the pipeline has become stronger. In fact, degree of engagement has gone up with the customers.
So Nanda, I just want to take your point forward here. So roughly 40% of revenue comes from the US. You said 30% of that is specific to OEMs, and there the threshold for you is above the 80% to 85%, which is now not going to be tariffed based on the announcement that was done a couple of days ago. Is that correct?
No, so let me clarify. So 30% is of the total revenue, which means of 30, not 30 of 40. I mean 30 of the total revenue of the company.
Okay, okay.
And the value addition requirement is for the US OEMs, not for us.
Correct, correct.
Yeah.
And sir, just wanted to ask you, because you also have a plant in Michigan for starter motors. Essentially, how much of the US revenue of 40% is coming from within the USA, which won't be affected by tariffs? And how much is actually exported from your facilities, either from India or from around the world?
So exports to US largely happen from India. We do have a local facility from where we are doing about, let's say, about $20 odd million of revenue. But there also, the preliminary sub-assembly parts are done in India, and the final assembly is being done in US. So it's not a completely independent operation in US. So for that matter, I would rather look at the whole equation in sort of at par rather than segregating the US supplies, because part of that will also flow from India.
Mr. Nanda, you also have already a plant in Mexico. You have another one coming up in FY26.
True.
Is the assessment that USMCA, and I think your plant will be compliant with that, is the assessment that all auto parts essentially exported to the US from your Mexico plant will not have any kind of tariff impact? Would that be a safe assumption to say, as things stand as of now?
So I think, basis the latest circular, and I don't know if things again change later on, but the tariffs have not been taken away. The OEMs who eventually are supposed to bear, the cost of tariffs, they've been given, a relief that in the first year they'll be getting 3.75% of the sale price of the vehicle as a subsidy or rebate from the government. Okay, provided their value addition through US or USMCA is above 85%. And in the second year, the same number comes up to 90%. So as long as our customers are assembling the final vehicle in US and have that kind of domestic value addition, including USMCA, they will be eligible for this rebate from the government. So to that extent, they should be able to bear the increased cost of tariffs.
And Mr. Nanda, just one update on your acquisition of Escort's railway division. The timeline has now moved to May. I just wanted an update as to what's any kind of reason for the delay, and where are you expecting this to close by? Is that expectation of closing in this particular year itself?
Yeah, so it's been moved. We've given out the date. The new closing date is 1st of June instead of 1st of May. So in these transactions, there are various government approvals, etc., that are required, be it factory license transfer, and there's so many other approvals. And, sometimes there are delays. So basically, the date has been pushed out because of the conditions precedent, which were set to close the transaction by 1st of May. They were not getting met by 1st of May, but we are confident we should be able to meet the 1st June deadline.
Mr. Nanda, thanks so much for joining in, giving us a whole host of details about the company, as well as what's your view of the tariff market. And we look forward to our next conversation. But thanks so much for joining us today.